With this, however, we would be shifting our focus to the next panel discussion, which is also the last panel discussion that we've lined up for you today. And once again, a burning topic, as it's been since morning, we've been divulging into interesting topics. This one is transitioning to a digital first world in banking and lending, of course. So, in this session, we will have Mr. Lalit Mehta, who's the CEO for Decimal Technologies, who shall be moderating this session. I'll invite you to join us on the stage, sir. Along with him, on our panel today, we have Mr. Rastogi, Chairman FACE, Mr. Vipul Sharma, Founder and CEO Checkbook, and Mr. Adhil Shetty, Co-founder and CEO Bank Bazaar. Along with them, Mr. Madhusudanan R, co-founder M2P FinTech. I would request you gentlemen to kindly please take the stage for this panel discussion.
Hello. So good afternoon, everyone. I think, sorry about this delay. I thought it's going to be delayed till 5:25. So I think the topic that we have for today is very interesting, and more importantly, the panel that we have here. I don't think I could have got a better panel to moderate. I think thanks to FinTech Festival for organizing this panel. So the topic that we have today is that the entire digital, how do we make it mainstream? The entire digital that we talk about all the time, is it really becoming mainstream? So let's simply look at, when we talk of digital, where all the digital really comes into picture. Whether it's banking, which is CASA typically, for financial inclusion, we would want to use digital to make sure that the financial inclusion goals of the government or the nation are taken care of. Then we have complete lending ecosystem, which is very important pillar for us to meet our goals for GDP, $5 trillion, fill the credit gap. And third one, of course, being the wealth management piece. So digital today is playing a very, very important role in all the three areas. But we would largely try and focus on lending today. We will cover a few other areas, but lending is going to be the main focus. So we were thinking that if we really need to make this entire digital, we cannot really make it happen without the regulator or the policy participation, without really government and policy supporting that. So there are certain things maybe which need to be done by the regulator for us to make sure that the digital becomes way of life. It's not just a channel in the banks, either for lending or for customer acquisition for CASA, but becomes a way of life, that becomes way of thinking for the banks. So what all regulator needs to do, I think I would just want to start with what all regulator can do to make it happen. So I think no person better than Ram would be there. So Ram, if you look at, government is doing a lot of stuff today. Government is kind of working on many frameworks, many platforms. At the same time, we know that digital is barely just about 20% of truly, if you look at banking. Whether you talk of lending, you talk of CASA onboarding, I think only the products which are very, very simple, they have gone digital. The products which mean, whether it's SME lending or products which are a little complex, they have not really become mainstream digital. What should government do? What regulator should do to make sure that this does not get restricted to 20% or 25% as we speak? How do we make it mainstream?
So, that's a good question. Since regulators are not there, and I'm not a regulator, I have worked for 29 years with SBI, and another 13 years with NPCI, and worked very closely with the regulator. And let me say that regulators appreciate the work done by FinTech. Let me quote a study in 29 September 2021. Even the finance minister communicated to parliament that the FinTech penetration in India is 83% as against the global of 64%. So there is a delta of 23%. Having said so, in 2021 financial year, 1,40,000 crore was distributed by FinTech digitally. Now, this is a good point to understand. So, I beg to differ with you. Yes, they are doing a good job. But what is happening today in financial inclusion, the financial inclusion index of India is only 53.9 as on 1st April 2021. So this is a matter of worry. So there were the four legs of financial inclusion. Basic banking services, yes, it has been done well. But the credit side, it is lacking. But what is happening today that 53% of this 1,43,000 crore is being disbursed by NBFC digitally. But while doing so, people are trying to outsmart each other and not becoming a responsible lender, particularly when it happens as a KYC. They're using a minimum KYC to do a lending of more than 10,000 rupees, predatory pricing, and using various means for collection. And this is becoming a real problem for RBI. RBI is very keen, and then that's why the two committees were set up by RBI. One was that Wattle committee, and the second is Nandan Nilekani report committee. And they're planning to do it, but they're waiting for two major decisions to be taken by Government of India. One is the Data Security and Localization Act, which is going to be passed during monsoon session. And it is going to be as tougher as GDPR of European Union. And the second thing is that PSD2 kind of certification is standard. Any fintech which qualifies that standard, they can join RBI's bandwagon and can get an API with the bank, so that the dependency on the bank will go away. Having said so, what is required today that fintech should also, in the form of either an association, should go to RBI and tell them that what exactly they want and what they are doing. In this line, digital lenders particularly, they have created an association phase which is doing a job and communicating with RBI. Recently, when the master guidelines for microfinance came, RBI told that they are also working on the digital lending. So my submission to all my fintech brothers that be patient. Something great is coming. Nobody is going to stop it. The only point they want that at the end of the day, it should be a win-win situation for banks, fintech, and consumers by and large. Thank you.
No, great, Ram. I think I picked up 3 points from what you said. I think fintechs definitely have done a great job in distribution of 40,000 crores. Fintechs being regulated is something which seems to be a very important point. So I think fintechs would definitely be benefited by regulators. The players, those who want to stay for the long run, they would want to be regulated. So I think that's a good advice for fintechs to go to the regulator and really kind of try to kind of get the regulation created which is most needed and the way it is needed. But third point that you made was that, now these fintechs tying up with the banks directly. So a lot of frameworks and platforms are coming up in the form of account aggregator, Oken. But I have a little, skepticism, so to say. When you talk of platforms like Oken or account aggregator, now while 40,000 crore has been distributed by fintechs, but at the same time we know that the Indian lending market, including corporate and SME and individuals, is close to about $300 billion a year. So out of $300 billion a year, 40,000 crores is a very minuscule, amount.
It's 1,40,000. 1,43,000.
1,40,000. Okay, my bad. So, but still, I think a lot of stuff still gets done in a very conventional way. BSAs, BCs, bank sales staff plays a lot of role. While we are creating these platforms like Oken and Account Aggregator, how do these platforms become accessible to these offline channels? I just want to kind of add a little, is there a possibility of having something like ONDC like platform being created on top of Oken or Account Aggregator? I think you can, if you can just throw some light on that, that'll be great.
This is a kind of creating a marketplace whereby both borrowers and lenders, they are coming and interacting to get benefit from both the side. And who can better tell us, because we have somebody here who's already created a successful marketplace. So I think this question is you, and please tell us that what are your success story and how you have done that.
Okay. I first want to comment on the regulator question. I think Ram answered it great. We have to give the regulator credit for some of the incredible growth India has shown. In specific, I want to call out what regulator did in 2020 with video KYC. The entire country was locked down. No one could step out. Business was zero. Now, if you look at video KYC and how it's performed over the last 3 years, incredible, but it's because it's very secure and robust. You have to do an Aadhaar check in it, you have to do a PAN check in it, and a bank officer has to validate and authenticate that the real person in the PAN card is applying for the loan, and it scales seamlessly, right? 90% reduction in KYC OPEX, 3x increase in reach, we have to give credit. Now, I think a lot of people, coming to the second question, are working on democratizing credit. I think whether it's Madhu, Vipul, what we do at Bank Bazaar, we're all trying to see how we can take invisible customers who the current banks and NBFCs can't see and allow the banks to allow digital delivery of credit. I think it's a work in progress. Now, I don't believe there's one silver bullet. So I don't think one can do one thing, but I think account aggregator is a building block. Oken is a building block. And what we're seeing at Bank Bazaar, right, is so many millions of consumers who before the partnership started with the bank didn't know how to reach. They couldn't reach because either there was no physical sales infrastructure. Now we've removed that blocker using technology and video KYC. Or they couldn't reach because they said, I need this customer's bank statement. I need this customer's 3 years income tax record. And that also we've solved, right? Using technology like account aggregator. So I think all these building blocks will come together by people on this stage and in this event to truly democratize access to credit.
Are you planning to go for P2P lending also in that Bank Bazaar?
P2P we don't have plans for.
No, great. Thank you. Thank you, Adhil. So I think now let's kind of look at, Bank Bazaar would have done many integrations with the banks. And you did integrations when Oken account aggregator was not a mainstay. And Madhu has created a platform which kind of pretty much becomes more like provides platform as a service and operates between fintechs and banks. So Madhu, I think what I have seen is at least that a lot of challenge, the readiness of the banks for this integration. While, all of you have success stories behind that, but we know that, the reality is that a lot needs to be done. Typically, I think where the struggle starts is when you have to integrate with banking system, either banks are not ready or banks are slow to move, and probably platforms like yours are needed more to make that kind of feasible. But what typically is the advice for fintechs for integrating with banks and really kind of expediting that? One, of course, is to use the M2B platform, but what else?
Yeah, okay. Now that you've done the plug for me, besides, I think there is fundamentally a large shift that's happening in the market with respect to how banks are looking at tech itself, right? That is at the fulcrum of how we operate and what we look out for. And I just want to lay out a framework in terms of how it's playing out, and I probably will answer the question as well. Is that, and regulator also is saying, let banks do the banking while the distribution can, the focus can be more on the distribution and how customer journeys can be built better. So if you keep that as the regulated framework, we today have two sides of the equation, and that's how our business is sort of deployed. So there's a need to actually, repurpose technology at banks, which is what the effort that we are, trying to do, banks are trying to do, which essentially is to move away from what is commonly defined as legacy, right? Which is nothing but, the way tech was used, bank used to buy technology was in tech silos. So I launch core banking, I go do a RFP. I launch credit cards, I do an RFP. I do UPI, I do an RFP. So there are silos of tech that sits in the bank, and somebody in the bank is trying to piece it all together, right? Today you have platforms that can actually provide an integrated sort of playbook. So there is a need to actually repurpose, and the regulator recognizes that recently there's something called digital banking unit guideline that came out, which allows a differentiated strategy for digital outreach and all that. So that's as far as that regulatory supply side is concerned. So if you make the supply side efficient, automatically that lends itself to the demand side where you could partner with as many players. Is that going to be a no-code platform where somebody can just drag and drop and launch a product? The answer is no, right? I think we are still, some time away from getting to that point, because at the core, when there is a partnership that's at play, bank is extending its name. There's a franchise risk, and bank today stands for trust, right? So they have to go through all of the things that they have to do to ensure that their name is not, disrupted by partnering with someone. So therefore, there is a lot of time and effort that goes into onboarding a partner in a particular bank or onboarding a fintech in a particular bank. But wherever there is a sliver of opportunity to make the banking process more efficient, we have generally seen a lot more adaptability from banks to partner, whether it's on us or some other partner. And increasingly we feel that there's also the crunching of innovation cycles at banks, right? So 5 or 6 years back, when wallets was a big theme or a rage, it took banks 3 or 4 years to come out with their own wallet offering, right? Maybe 10 years back, right? When in the first wave of fintech action sort of unfolded. But today, every bank is talking about BNPL in some form or shape, right? It's not just a buzzword, but banks are really building business models around it to figure out how to latch on to a new theme under a construct which is regulatorily palatable, right? And that's the most important thing. So therefore, a lot of the action that's happening on the fintech side, there's a lot more, openness with which banks are looking at it. So the partnership cycle times have kind of reduced. So we've been, in the business for 7-8 years. We know like it used to take almost a year to get a program out in the door. Today that can, go live in like few weeks, if there is intent and, appreciation from the bank as well, right? So that's how I would sort of put it.
No, great, Madhu. I think so. The answer lies in, of course, the technology and streamlining the processes on the banking side, and the openness for fintechs is already being seen. I think you're right. I completely agree. A couple of years back, getting an integration with CBS was I think the entire openness seems to be there. So now let's look at it from a very different standpoint, from the ecosystem standpoint. If you look at, we have Bank Bazaar, we have Checkbook. If everything is to go digital, then the entire problem of reach becomes very different than what it is today. You don't really have to open those many branches. You don't really have to kind of have people going everywhere. Then why do we need fintechs at all? Why can't we just have the digital do all the job? I know that can't be done, but I would want to kind of maybe hear from Vipul or you, like, what is the real problem that fintechs are expected to solve in coming times? Because if digital is to solve the problem, then banks themselves can do it as well.
Sure.
So
Yeah.
what
I'll
is
just make a quick comment and maybe Vipul can sort of chime in. So India in itself is if you look at it in abstraction, these are very different, 3 different markets that are there. The first 100 million people like you and me and everybody in the room, the needs of a digital sort of service delivery is very different to the next 200 million, to the next 1 billion people, right? So therefore, digitization in itself is very different for depending on whether you're targeting what in the investor community call it as India A, which is people living in the top 10 cities, or the segments that are beyond it where it's more assisted, or in some cases there is an overkill by doing digital, right? So you don't need to actually do digital. You actually have to open bank branches and things like that. To my earlier point around DBU also, is a regulatory framework for it to be allowed where you can have humanless, without a person, a branch can sort of run, in an automated sort of fashion, right? So I think there is at least a foresight to say that you may need to have a 24/7 counter which doesn't have to be manned, but banking services can be availed, is where at least the regulator is thinking. It's, and you have to look at it from a 10, 15-year time horizon. Nobody thought, Jio would do 300 million if Aadhaar did not exist, right? So the foundation is being laid from a regulatory framework standpoint. I think we will probably have that play out.
I think Vipul, you do this entire, you have kind of, you pretty much extend these banks to SMEs. What is it that, the purpose that you or like other fintechs are trying, reach is one, but what other things you specifically bring to the table which benefit either the consumers or the banks?
So, I actually operate in the wild, wild west, of Indian fintech. because MSME, which is especially sole proprietorships, it's about almost 6-7 crore customers. Out of that, you have about 2.5 crore kirana stores. You have about a crore restaurants, and there are many other shops. All the shops that all of you guys go and visit, all of us go and visit. And the reality is that for that community, banking has been extremely tough. Largely because banks have focused, just to give you some numbers, like India has about 50 crore bureau reports, credit bureau reports out of 140 crore people. So we still have a long way to go on the total bureau. But if you look at, for example, a product like business loans, which is what my community would get, there are only 1.3 crore business loans in India, right? That's the total number of bureau business loans that are available. So obviously there's a huge opportunity, and I think the traditional banks, a lot of the earlier fintechs have also focused largely on the salaried side, because actually 10 years ago this number was substantially lesser. So the gains that we're talking about, we're saying about 25% is digital and so on and so forth, is largely on the salaried side. Now, why haven't banks or traditional banks gone after this segment? It's the size of the salaried class in India. It's largely because, one, the salaried class was enough to give your 30% growth year on year for the banks. They are public listed companies, they have imperatives on growth. They can't just go after every virgin territory. The second was there was ease of access of data, right? You have salaried accounts. I still remember in SDFC Bank, in 2006, we used to still take cash salary. We used to take check salary, right? And then gradually it stopped. I don't know how many of you are from banks, but gradually it stopped to a point where only if you had salary credit from your organization, only then you could be eligible for a loan or a credit card and so on and so forth. So that has happened in the salaried side, but on the MSME side, the requirements are that you have to, have a 1 crore turnover to get a current account. Then I will be able to give you lending, right? But then to get the 1 crore turnover, he needs a loan. So it's a catch-22. So we are here to break the classic catch-22.
No, great. I think Vipul, I totally agree that, and there is law of diminishing returns which is now set in for salaried personal loans and, especially talking on the lending side. I think the entire growth for Indian economy has to happen on the basis of credit gap being bridged for SMEs, sole proprietors. Typically that business still, that's my belief and data that I have, a lot of that business is still serviced by, the sourcing part is still done by either DSAs or BCs or CAs. They typically do it. Now banks definitely, I'm not sure if they're ready, but that doesn't seem to be the case right now at least. So there are two ways we can approach it. As a nation, we can say that, okay, let's kind of cut out the intermediaries and go everything digital. Or let's strengthen the intermediaries. So let's look at US market. The mortgage industry still is managed by mortgage brokers in US. In spite of the fact that they do significant digital stuff, may not be as great as India, but looks like the intermediaries are going to stay. The intermediaries are not going anywhere is what it looks like. What should banks be doing? I think maybe Adhil, you work with a lot of banks. What should they be doing because until we make these intermediaries efficient, until we bring them into the gamut of digital, the economy is suffering for sure. We like it, we don't like it, doesn't matter, but economy is suffering for sure. The credit gap, the speed at which we want to bridge it is not going to happen. So what can be done around that?
So I think it needs to be clear what the value each party, the intermediary and the bank, is bringing to the table. And I think Madhu and Vipul and Ram spoke well about it. Now, I'll give you 3 decisions the bank needs to make, right? So there are about 35 million credit card holders in India, but there are about 150 million people with a credit card over 700, with a credit score over 700, who technically would be able to use that product well. So the question I think the banks are asking, and the value they want to see from good intermediaries, are they saying this 35 to 150, I can either do it myself It'll take me time, it'll take me capex, it'll take me risk, or I can partner with a good intermediary. Number one. So 35 to 150, do you want to do it yourself or do you want a partner? The second thing is, in this entire pool, who's of high quality and who's not of high quality? Because all these consumers are new consumers. They're not my savings account. So who's high quality, who's low quality? I need to partner with a fintech to figure that out. And at the end of the day, right, it's not about giving money, but making sure the product is active, making sure the product is repaid. Can your fintech partner help you with that? I think for digital fintechs to really scale, we've got to see if we can answer these gaps, like you pointed out, these pain points in the bank system, and can we answer it better than all of the other options? Because there's an option of a branch, there's an option of an offline, but can we plug these problems better than anyone else and also make a profit?
No, great. I think I don't know how we are doing on time, but I'll just I'll just kind of pick this last one. One thing that is for sure is that intermediaries have a better understanding of customer because it's very local. India has got huge variety of cultures, huge variety of the kind of languages people and we interact with. So all intermediaries, whether digital or non-digital, one thing that they bring for sure is better understanding of last mile. They're able to kind of offer that personalized experience or understanding of that specific segment much better than what a bank at a head office can do.
I beg to disagree here. DSAs do not have any accountability if the loan goes bad. The follow-up is not proper, they do not do anything. We in bank, we nurture that SME. The only part is that the UI and UX, we are not able to match it, and some banks have realized this, and SBI has come out with SBI, for SME sector. So I don't agree with that. The DSA is going to really change the world. And let's not compare India with USA. 24% people in India are number literate. They only quote their turnover is only 12 lakhs because up to 12 lakhs turnover, they don't pay income tax. Somebody was telling me if I drive a Honda City car, I'm entitled for 10 lakhs loan. It doesn't happen in bank because banks, the accountability is there. CBI will be after you even for 5,000 rupee loan. While for the fintech, if they lose 50 million, nobody bothers. It's simply written up. So what I'm just trying to say, yes, there is a requirement for SME lending. Let's work together. Co-lending is the only way where everybody has got skin in the game. Otherwise, I'll give you 1,000 application. I'll say I'll give you 1,000 applications, and I know very well that these are the defaulters. If you talk about anybody and why the money is going in PPI wallet because they have overstressed their the borrowing capacity. So that why I'm nothing against the DSA, but DSA model has failed in India.
No, and I agree with Ram sir. Skin in the game is important. So as you go along, there's no other way.
So then what we are saying is that the entire, at least the intermediaries in the shape of DSAs should not be existing because the accountability, there are again two ways. Either you license this, so mortgage brokers in US are licensed and they have accountability. Either you bring them as part of the mainstream, give them accountability or eliminate them. These are the two possibilities.
Regulate them and create a level playing field, banks versus fintech versus DSA, whatever you say. If the 10 rupee loan goes bad, you hang the DSA the way you are hanging the bank of people.
So great. So I think
So Lalit, just one point, right? I think there is today, there's a framework around outsourcing guidelines that are there. So the bank are ultimately responsible for it. But the framework with which we have to look at it in a digital sense is that if bank is the manufacturer, right? So think of it as a good. All of these channels are distributors of it, right? So therefore, the product that is getting manufactured, that configuration is always controlled by the bank, which includes risk in some way. So if I'm not going to lend on a Honda City, I'm not going to lend. That the bank is making that rule. But whether that goes through a bank's branch as a channel, or through a online as a channel, or through some other channel, and the channels will evolve. that is how I see it playing out, and and in some sense that's why you say it's omni-channel, right? So
Very interesting discussion. No.
Yeah, and I want to add a point here. Sorry, Lalit, because I had to also say something. No, my point is, I think what we found out at Bank Bazaar, right, is a majority of our business now is co-branded credit business, like co-branded credit cards. So we've gone to the level of understanding who's our consumer, what is their aspiration. They want to improve their credit score. They want digital no-cost EMI. They want digital reward. And these co-branded products, which are a majority of our revenue, is actually built to cater to that market, and you can't get that elsewhere. And that's really what's scaling up incredibly fast, right, for the platform.
Yeah, I think that's absolutely right, Adhil, because the entire co-branding or co-creation of products is something. So if you look at whether it's co-lending or co-creation of products, I think that is definitely the best possible strategic partnership or engagement between the distributor and the manufacturer. I completely agree with you. I think, but Ram, Madhu, and what you're saying, there's a little dichotomy there that I see. And the dichotomy is that, whether the manufacturer is accountable because he's the one who's finally making the decision, or the distributor is accountable, or the platform is accountable. I think it says time is up, so I don't know if we can spend more time, but I think I would just want to leave it at that. Today, we have a very open notion about who needs to be accountable, whether it's distributor, or it's the manufacturer, or the platform itself. I think I would request to the regulator to kind of, if we can have some clarity around that, if we can give the right amount of accountability for loans going bad, because that's not good for anyone. Nobody likes loans going bad. To each of the players, depending on what they bring to the table. I think that's going to be the right ecosystem that we can have. So I think once we have that, then probably all kinds of channels, whether it's DSAs or FinTechs or lending marketplaces, all of them can grow. All of them can do the right amount of servicing to the customers, and the right amount of accountability is set with each one of them. I think I just want to leave it at that. Thank you.
Thank you. Thank you very much. Thank you. Let's have a round of applause, ladies and gentlemen, for our panelists here, please. Thank you, Lalit. Thank you to all the panelists for yet again bringing a very, very interesting session. If I could have the panelists coming together for a group picture, please.